Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are navigating digital finance all together. We got a good show here for you guys tonight. I got myself, Zenith, your host, and we also got Tracker joining us here tonight. How you doing, buddy?
Doing good, man. I left you hanging last week, so I feel bad about it. I hate doing that, but things happen. So we're ready to go this week. I know you covered some of the news that we were talking about last week, so that's fantastic. Certainly, not, I know we're going to dive into the big topics today, get into that clarity. But I know the first thing, what you want to hit on the price action.
Yeah, that's the game plan. So tonight, folks, we were talking about price action in the markets. Had a bit of what I called a low probability scenario, but still something very exciting nonetheless. And then we did get an update. The actual release document for the Clarity Act was put out to the public, so we can take a look at all the different changes that have gone on, see what changed, what didn't, where it stands right now. Always look at the poly market odds because that's our favorite thing to do, apparently. And then after that, story for the evening: the S&P. Let's see, Pantera Capital. You might remember that name. They actually released an index for crypto tokens, and notably, Bitcoin is not part of it. So we're going to be talking about why they specifically left that out, what it means for the rest of the market, and kind of what exactly is traditional finance thinking with this latest move. But that is what we got going for the show here tonight. So with that being said, let's get cracking. Alrighty, up first. You know what? You love it. We got the charts. Up first is Bitcoin, currently sitting at about $65,000. Last time we talked, I want to say we were sitting right here at about 63, right at our 50-day moving average, which is our orange line there. Since then, we actually went all the way up to about 66, almost $67,000 before we started coming back down a little bit. But the most notable things out of this is that we got a cross of the 20 and 50-day moving average. It shows that it could be a little bit of a reversal in momentum. So, meaning that our short term is now a little more bullish than our medium term. Granted, we're still, well below our long term momentum indicator, which is our 200-day. But nonetheless, in the short term, we're at least bullish for now. And in the medium term, we're actually bullish as well, which is odd because if you're a 60-day cycle person like myself, we're currently on day 49. I mentioned it last week, which is that I was targeting a cycle low pretty much between now and the next 10 days. That's just how the shorter cycles go because we had our cycle high on day 10. This one was a good effort, but we didn't quite get a new cycle high. So it indicates a couple of things. One, this could potentially be a failed cycle because we have the cycle lows here in the middle as opposed to the ends. Option number two is that the count could be off, but I happen to think that that is a very almost equally unlikely as the failed cycle case. And then option number three is that there could be a rough couple of weeks coming in here to finish out the rest of the cycle before we get going into whatever the next cycle happens to hold in store for us. As far as the RSI goes, it's actually looking pretty strong right now. Currently sitting at about 54. 50 is our neutral point. This is an index of 0 to 100. Keep that in mind. And the RSI is actually getting higher. So these price peaks that we've had over the last 2-3 weeks, the relative strength is actually a lot higher than it was back when we had our cycle high on day 10 back in the 15th of June. Notably, part of the reason for this, in my opinion, is that we got really depressed when it came to RSI on our dump all the way down to 59,000. And then we went back down to 58 and like 57 and change. We didn't even crack that 30 mark, which again, that's the bullish divergence going on, which is that price go down, but sentiment's going up. And well, as a result of that, in my personal opinion, that's where we kind of got this little run going on here. One of the odd things for me about this one is that if we flip over real quick to the ETF flows, ETF flows have been positive pretty much since the 1st of July. They're not massively positive by any stretch of the imagination. We're looking at like pretty much consecutive $250,000 days for inflows with a $500,000 day out in between. So looking at the ETFs, we're not seeing a whole lot of action, but it is a steady inflow, which does make sense when you compare it to our picture on the charts, which is that price has been grinding up. We got above that 22 moving average and we continue to stay above it. Shoot, we retested that thing like 1, 2, 3, 4, 5, and we're on our 6th retest right now. That is a pretty strong trend, but at the same time, it's more of just a small trend because if we zoom out, realistically, it's not taken us very far, but it is at least holding price up in the temporary right now, which, to say the least, it is still something nice to celebrate. So you got that going on, which is nice. Tracker, what do you think?
I'm in the camp that it's showing the same, almost exact same results as we did back in February, like until it proves us otherwise. Um, if you go back and zoom out, and that's why I was curious about the inflow and outflows. I bet you'd see a very similar pattern if you zoomed all the way back out to February. The inflow outflows, I'm curious to see. But so we roughly had, you know, basically for all intents and purposes, you could say almost like a double bottom. But here's the thing that I do see it that I like. Basically what I'm saying is RSI got extremely oversold in February. It got extremely oversold in June. We had a retest in February off from the lows, and we bounced higher. We had a retest at the end of June from the lows in early June. We broke down even more, yet we're still trying to grind and go up higher. The only difference is, so it looks weaker. The move looks weaker in June than it did in July or in February, sorry. But we still eventually still sold off. It was just basically a relief rally in the bear cycle we're in currently, or the bear trend, we'll say. I don't want to get into the cycles, but the thing is, we bounced back over that 200 weekly moving average on Bitcoin, and we kept saying for many long time here is the 200 weekly moving average has always been a good pivot point or a good area. If you get down to it, it's a great time to buy, or it's a solid time to buy. If it gets under the 200-day weekly moving average, you're getting at a really good discount entry point because it hasn't ever got under that very much at all. And at Bitcoin, I know Ethereum did. It got under briefly back in August of 2023 all the way to October of 2023. So it stayed down there for a little while. But I feel like we're more volatile now. But still, it's above the 200 weekly moving average, which is a good sign to see for Bitcoin itself. But like I said, this could be nothing as until proven otherwise. We're just in a relief rally. And that's why I'm always curious to know about the cycles and where we are in the cycles. So you're saying most likely the likelihood for Bitcoin is to basically we're going to probably start to pull back here in this 60-day cycle, or what would have to get your attention to say maybe we're not, maybe it still has room to go for a higher in the 60-day cycle.
So, for the 60-day cycle, is this super bullish? In my personal opinion, not especially. It really highlights the point when we zoom out and we look at the last cycle, because this rally pretty much between end of March till early mid-May, that had a lot more gas to it than this one right here. This honestly, you could just call it chop between whatever our high bound and our low bound is for the ranges that we're kind of going between right now. That would make sense in my opinion. There's not nearly as much energy and gas as going on as what we saw back between March and May. So realistically, is this good news? Price is holding up. It's slowly starting to creep back up. It challenged for a cycle high, but at the end of the day, it didn't put it a new cycle high. And as we've seen in various other times during the rest of this bear market, price can drop quickly. It really can. So it all depends on what kind of volume is going on, who's selling, who's even left to sell at this point, in my opinion. But realistically, like I still think this is probably going to be a down cycle, just based on the probability of how things go. Granted, we are at this high point, and to get all the way down there, we'd basically have to drop like almost $10,000 pretty much in Bitcoin price, which effectively would be like a 20% drop over the course of like 2-3 weeks. It's possible. It definitely is. But at the same time, the longer we stay at these higher levels and the longer we stay above these moving averages and see them start to move and start to go in the same direction, that is a bit of an indicator that the winds could be shifting a bit. But at the same time, just looking at the data, the 60-day cycles are highly effective in my opinion. Granted, when you do the statistical analysis like I have, the major downfall of it is that there's just not that many data points because realistically, 60-day cycles are 2 months. There's 12 months in a year, so we're going to get 6 cycles in a year. Bitcoin's only been out since for like what, a little over 16 years at this point. So it's not that I know it's like close to like 80 cycles or something, but keep that in mind. When we're talking about like trying to analyze data, that is still a very small sample size. So it's closer to an approximate science as opposed to an exact one. But based on what I'm seeing, there's very little reason to believe that we won't go complete this cycle It may get close, and that's close enough because it's not exact. But as far as I see it, realistically for the rest of the cycle, I'm kind of expecting some downside. I think that there's not enough volume going on right now to really justify a higher price action. And if there is enough price action and at this point, it wouldn't take much. It could be the thing that drops us down to those back to those lower levels of the cycle. And I think we got a little bit of support forming right here at this like 61.5 level. But honestly, this is kind of a hope rally, I would argue, because look at the volume candles. It's not that large. And if we go back and compare it to some of the other days, even just like this stuff right here, compared to the chop that we had previously in the last cycle, it's still lower. So what I'm saying is I think the cycle is going to hold. I understand the optimism. I really do. I want to believe it as well because, well, I would prefer price not go down further, but I that's just what I'm seeing. You know, I'm still saying probably next week and a half. That's what I'm looking for to see this trend start to reverse and head towards the downside.
Well, I know we're going to talk about the Clarity Act, but that would definitely give it momentum to go down if it gets rejected, though. But I'm more interested in Ethereum just because of what I've been seeing on Ethereum than I am in Bitcoin.
Ethereum's looking pretty good.
Yeah, Ethereum is looking really nice. Definitely more strength this go around. It's like it looks stronger than Bitcoin, and then vice versa back in February. So Ethereum's holding up strong. Obviously, it's probably going in the tailwinds with the Clarity Act potentially getting passed. I'll talk about that here more in a minute. But like I said, I like Ethereum's chart. Like basic double bottom. It basically almost had a double bottom basically back in February too. So it's setting up to be very similar. So is this going to be a sell the news event? Most likely, it probably will be, regardless of what comes out. Some people are in the camp that they think that this thing could just start continuing its rise. I just don't think that's very likely. I think the way the things have been going, Ethereum's going to come back and retest. We don't just start hitting a quick double bottom and we take off. A W-shaped bottom and we start doing. That's not the way these things reverse. And right now it's still in the long-term trend. What I'd like to see is I love to see Clarity Act get passed. Then we have a sell-off, come back and retest, but we do not violate the lows that happened back in June around 1,500. I'd love to see that hold up, maybe even a little higher. Maybe the $1,700 level will be fantastic to see, and then we start the next bounce up. That would show really strong strength, and then hopefully getting up higher. I think on this move, the way I'm playing it is, I think on this move, I could see Ethereum getting about, if it makes the move, it could get over 2,000 and maybe that 2,100 area. Then I expect it to get rejected at that point, somewhere around there. We go down and retest. It has been under the 200 weekly moving average since we violated it back in May. We went under it again in February, but then we got back above it. Now we're back down below it. So Ethereum is definitely more oversold to the downside than Bitcoin because of the 200 weekly moving average being so far down. And then, so those are kind of the scenarios there. Like we could extend you, but we could also sell the news event. But I think if you get a sell the news event, hopefully it's the Clarity Act getting passed because that's going to give it more reason to probably hold up on the pullback. If it does that, if it gets rejected, we could see another next leg down in this this downturn, which that's why I'm hoping the Clarity does get passed. Now, the other thing that I wanted to see is the Ethereum BTC ratio. Like that's a good looking chart. That's a violent move. That's a nice trajectory to the upside. And I know we've had these quite a few times during the down cycle, but the ETPC ratio is looking pretty strong. And personally, I'd love to see it get up over the 0.32 level, because then that would get us back above the high that we saw there in April. That would be a good solid sign that it is starting to reverse. So the bottoms may not be in Ethereum and Bitcoin, but the ETH is still looking more strong than Bitcoin. And we're going to go over another article talking about something interesting too, that way Wall Street's looking at it. But keep in mind, it's clear that gets passed. It's going to benefit Ethereum and other altcoins with smart contracts. Bitcoin is not going to benefit. It'll benefit, but it's not going to be anywhere near the level of attention that these other assets are going to be getting. Interesting. And I just want to say, hey, was it Wink Fright? Thanks for joining, man. Appreciate it. Yeah, Pulse Chain has actually been going pretty strongly over the last, week or two. There's a lot of rumors swirling around the Bitcoin Pulse Chain community that's been going on really well. So hopefully we're trying to put some bottoms in. FYI, if you did put your any dry powder on right around now, doesn't take a lot of movement. Easily a 10x just to get back to the recent highs that occurred back in mid to late this time last year. So a lot and very low liquidity. So obviously it's is a good thing to keep an eye on if you're in the pull chain community. Trust me, I'm eyeing some things here too, but I'm also watching Ethereum to even decide if I'm going to put on new capital to do any altcoins, because I really need to see Ethereum to show me it's going to hold. If it holds up, then everything else is going to do just well because of the liquidity bonding. If you guys have any questions out there, post them in there, and we'll be more than happy to take a look at them and answer them for you guys online too. So just post any chats you guys got, and we'll be more than happy to answer them for you guys. So keep that in mind too, please. So as far as price action, that's what I'm saying. I think ETH is obviously looking stronger. I want to see this ETH BTC ratio really get pushed back above that 0.032. That would be fantastic to see. Do I think it's going to be a straight line up? No. I think right now everybody needs to be leaning to the cautious side. I think people are getting a little euphoria because it's been such bad news. Now we finally get some momentum going, but it's going to need the Clarity Act to really get passed. And like I said, regardless if it's passed, you're going to have a sell the news event. But that hurdle is out of the way. Now we're going to be like, now I know some people are already talking about something else that's going on here. That's even more crazy, is that the new SEC chair coming out saying that new regulation could come out and stuff like that. So I don't want to dampen the storms, but once we get past this Clarity Act, now the new administration's coming on eventually over the next year or two. Are they going to be crypto friendly, or is it going to be back to, what we had to live through with Gary Gensler? Hopefully not, but we shall see. So that's kind of how I'm looking at least the price action on that currently and also in the future.
I get that. I look at the Ethereum chart and I actually think it's pretty optimistic, even more so than the Bitcoin chart. The reason for that being is that uh, Ethereum is actually fitting closer to the 60-day cycle model than Bitcoin is actually. Because this low that we had on the 26th of June, it didn't break below the start of the cycle there. Granted, this cycle is driven by Bitcoin, not Ethereum, but these cycles do line up pretty good. And they usually have a lot of correlation between the two. And the difference between them also does show up in the ETH BTC chart, which is looking pretty good right now. Granted, it's still pretty depressed, but at the same time, the trend is at least going towards those higher levels. And notably, it's breaking through the supports of back in February, and it wants to move those higher levels, it looks like. Ethereum is actually having higher highs as of recently compared to the day 10 cycle high over there. So, obviously, again, it's the Bitcoin 60-day cycle theory, not the Ethereum 60-day cycle theory. But at the same time, the 60-day cycle theory does transfer over from the foreign currency exchange models. So it does translate here. And this is one of those things that does kind of show that there is a decent chance that based on this, if you try to translate it over to the Bitcoin chart, which is that we have higher highs later in the cycle. Bitcoin had the higher high earlier in the cycle. Now we have conflicting data points. You could argue that Bitcoin maybe was a little too suppressed during that time, and Ethereum already had the real depression happen, which is why it's holding up better now. That could be the case that you argue to suggest that we might even get a slightly right translated cycle. So going out to like day 65 or even 70, 69 would be our first standard deviation. So sometime between 60 and 69. That is it's a realistic possibility, but I think you're kind of stretching it a little bit at this point. But every once in a while, this kind of case does happen. And overall for Ethereum, I'm happy to see it back up at 1873. That seems like a pretty healthy number, especially considering Ethereum's history over the last 4 years, basically. This seems like a good spot to be at. We're not challenging those lows. We're not seeing all the articles come out about like, oh, Ethereum's going to $900. It's like, no, we're seeing some correction. We're seeing regular action going on in the market. You can try to call it a dead cat bounce if you want, but I think that we've had enough of those to suggest that there's other things going on in the market other than just a bounce off of just big dumps. But overall, I look at the Ethereum chart, and this is actually one of the ones that gives me a good degree of hope for what could happen with this cycle and even potentially the next one. Sitting well above the 20-day, well above the 50-day, and that 200-day moving average sitting at about 2150 right now. It's really not that far off for Ethereum, especially considering the size of moves that we've seen it make in the past.
And just to add to it, it would catch a lot of people off guard if Ethereum started, let's say Bitcoin Ethereum starts, even though it pulls back, but then starts leaving the station on its price, starts heading north, and we never get the lows or everyone's looking at the cycle lows of October, November time, right? Let's say we don't get those lows. Let's say it starts leaving the station early and catch a lot of people off guard. And let's say even more complexity. Let's say Ethereum leads the charge this time, not Bitcoin. Talk about that. Talk about that would just mess up everyone's psychology, just to add more confusion. And I'm looking at you, TradFi. You are the one causing the confusion. So nothing would surprise me at this point.
Yeah, and just keep in mind, last cycle we saw Ethereum actually make its bear market low about 9 months before Bitcoin did. Because Ethereum hit 900 bucks back in like March of 2022, and then Bitcoin never actually made its full cycle low until pretty much like late November, even December timeframe of 2022. So it's possible for them to have different bottoms. Absolutely is. And especially given how we've seen Ethereum be able to behave very differently compared to Bitcoin in the last cycle. So it makes sense that we could see something similar here. So whether you want to go ahead and call it that 1500 is the bottom for Ethereum, if you look at past lows, there's an argument for it, but I still happen to believe that the true bear market low for Ethereum is not in yet, and it will be coming. And it's probably going to be close to that 1200 or even $1,000 mark.
Yeah, just to add to that. So yeah, on Ethereum hit, it was in June was the lows, and then it rallied up in 2022, of course, and then we came back and retested the lows in November, December, and then that was the bottom put
June,
in.
thank
Then
you.
it started going up. So June was the first time that we really had it. Well, June to beginning of July, so end of June, beginning of July, Bitcoin did not hit its low until the low, November and December. So Ethereum had already put in a low early, and the retest was done when Bitcoin bottomed out, and that's when Ethereum went up. So yeah, it's interesting. Actually, I didn't even quite pick up on that from back in the day.
Yeah. So I guess I am corrected. Good call there. It was not March, it was June is when Ethereum had the low, and then late November for Bitcoin. So
Yeah, but
yeah.
still, regardless, it was interesting how Ethereum bottomed first. Like it came back and retested, but on that retest, it bounced off the retest in correlation when Bitcoin hit its ultimate bottom. So that was interesting.
Yeah, the market's highly correlated, especially in these peaks and low times. So it makes complete sense to me. Doesn't mean that they're going to have the same exact shape where one point or both points are hitting the lows at the exact same time, but the overall shape it does match, especially in these times where they get really extreme. Those are the lows and the highs. Alrighty, I think we beat that guy up pretty good. So let's go ahead and transition over to one of the big topics of the evening. So we have officially released the new Clarity Act bill. Congress does do a little bit of the hard work for you. They do have this version, which I have on the screen right now, which is showing that all the different revisions that they made, whether there were things that were stricken or things that were added, red is crossed out, green is updated. So you can look at the entire thing and it gets pretty extensive. But the main news for what's going on is that we have it officially released now. And what's going on is that we had the Clarity Act go through the Senate, or at least the Senate Banking Committee, back in, gosh, I want to say that was May. Yes, it was. Around the same time, we also had the Agricultural Committee. They had the Advanced Related Digital Commodity Legislation. That one got out of that committee. Neither of them have gone to the Senate yet. But what we have here is a revision to the bill that came out of the Senate Banking Committee, which is the proper Clarity Act. What they did with this latest revision is they actually took those two bills, they merged them together, but it seems that it's more of putting the other one into the Clarity Act as opposed to like a true 50-50 split. Because what the Agricultural Committee did is they actually passed a lot of stuff with the Commodities and Futures Trading Commission, which this one also deals with, but the Clarity Act is a lot more comprehensive. So it kind of got wrapped up in this one. As far as what we're looking at for the main differences, is that one, we have the merger of the two texts. Number two, we have a brand new ethics provision. This is the main thing that was being griped about back when we were going out of the Senate committee, the Senate Banking Committee. Specifically, there was a lot of pushback about the president and how he and his family have a lot of ties to crypto, and it looks like it could be a conflict of interest. Well, the updated revision here we have is that it prohibits covered individuals from issuing or sponsoring a digital asset in exchange for consideration while in office. This restricts it from pretty much that is president, vice president, any member of Congress, federal judges and officials, and their spouses. So that's pretty comprehensive. And in my opinion, the great irony is that we kind of got we're seeing this before we're actually seeing limitations on trading for people in Congress. So who knows? Maybe crypto is going to be the thing that helps get that across the line. But what this is talking about pretty much is like you can't be releasing your own products. You can't be getting any sort of kickbacks or stuff from it. And you can't be getting like pretty much any sort of consideration as a result of like your sponsoring of a token, which just from an ethics perspective, that makes complete sense to me. And I don't have an issue with it. Does that make sense to you?
Of course, it makes sense to me that people that are in power that should be making decisions from an unbiased standpoint, of course. But reality is they're going to have workarounds. So this is, I mean, come on, this is Wall Street. I mean, you're not supposed to have insider trading yet. I mean, Nancy Pelosi's had a hell of a track record here, man. I mean, she is like the GOAT outside of the inverse, Kramer ETF, but I mean, he's still out, he's still winning outright, but she's done incredibly well for herself. I mean, incredible. So, do I think they're going to put it? Yeah, they're obviously going to put it in place because of World Liberty Finance, who has been basically the board, the main players on that whole thing is the Trump family, including Trump himself, who's obviously the current sitting president. That's a problem. Then you got meme coins going out and stuff. Oh, that was on the Solana network in the end of Q4. That was the Trump coin and Melania coin and all these other things. So yeah, there's a big problem here, man. Can't be having that. But in their defense, there was nothing in law. There was nothing there to say you couldn't. So I mean,
correct.
Do what you want to do. So
yeah,
I think they'll probably get it now. The only thing concerned here is I don't know if the reason I'm bringing up Trump is to make sure has he said that he's not going to block it if that's in there. And I don't think I've heard anything whatsoever that would be the case. So if they pass it, he'll probably sign it. Because let's face it, I mean, he's on his last. This is his second term, so he'll be done. So it's a moot point. He give it over to his family or other people to take care of it. That's how most of these things work. They have other family members run it, and then when you get out of power, then you're right back in, or you benefit indirectly in some shape or form. So I don't really think it's going to stop that necessarily, but I get that part. The other thing that I thought that was in here wasn't there? The only thing that I was concerned about, and I read it somewhere, that I thought that there was the piece of not crypto related whatsoever, but I thought there was something put in here around the voting, the voter ID checks and something like that. I thought that was in here or something linked to that. And I was concerned that would that maybe derail it because of that not being in there. I know the Democrats were all big on the piece we just covered, but I'm more concerned about was there also that fit into it as well. And just while you're looking that up, so Loomis, she basically has come out many times saying this is going to get passed. She's been saying that for forever. That this is right. We're very, very close. We've been hearing this for months and months and months. But keep this in mind: the Senate goes on vacation on August 7th. So if they're going to get it done, they got until now and then to get this thing done. And they need 60 votes. I think they got confirmation. I think they needed, of the 60, I think they needed 8 Democrats. I think all the Republicans were going to vote, I believe. But that ultimately came down, they were 8 short to get that 60 so filibustering doesn't occur. So basically they get 60, that's going to get passed. For them to get it passed, though, they would need 7 Democrats. 2 have publicly supported it so far. So you're still short 5 Democrats. Are they going to get them? If I was a vet man, they're probably all types of back. And those 5 Democrats who they're hoping they're going to get are probably getting all types of deals that are for their campaign and for their area. They could probably line up whatever your wish list is. You're probably going to get it. So there's a lot of back end deals probably going on to make sure that happens. I know that the prediction markets have boosted this close to 60, 72%. I know Polymarket, I think, is at 50. I know some of them are saying that high, but I think if you look at Polymarket, I wanted to say it's in the 40s right now. It got as high as 50. Where are we at here? So it's right back down again. So here we go.
Yeah, Polymarket's looking at 36% chance right now.
And keep in mind, the Polymarket,
this is just one of them.
Right.
Just one.
So you have the prediction markets are all over the place. They don't know. Look, this thing was as high as 75% at one point. So it's all over the place. You're going to see this thing probably be a crazy. I mean, if you want to gamble, I mean, this is certainly a way to gamble if you want to do that, because this thing's going to probably jump all over the place. But do we know when they're going to be on the floor? Do we know when they're actually going to be on the floor?
I don't think we have any official date going on right now if it's going for a floor vote anytime soon, but it's the obvious next step. Like it's the only next step other than just getting killed and just never seeing the floor vote. But that is the next official step for what's going on here. As far as the answer to your previous question, no, it doesn't. I'm not seeing any stuff about any non-crypto language in the Clarity Act. So this one appears to be still pretty tight and pretty strict, which could be a good thing, could be a bad thing, depending on what kind of thing gets stapled onto the backside of it. But
Look at
as it
that. That
stands
thing
right
was up to
now, I don't see that.
75%.
Yeah.
Okay, good. All right, fair enough. I thought I was reading that somewhere. I didn't know if it was or not. Like there was some pork belly stuck in there, which that's not one of those things they want to just sneak in there. That's too important, at least for U.S. votes. Um,
Yeah, that's true. As far as the rest of the bill goes, I'll hit this real quick. Um, they significantly expanded law enforcement and illicit finance tools. They're pretty much just giving funding and grants to actual state and local investigations. So the way that it works is that any of the ethics violations would actually be a federal violation, but any sort of like crypto enforcement done by agencies is actually done on a state level, which is interesting split to see there. Outside of that, they still have stablecoin yield prohibition. That language has not changed from that compromise that we got back in May. And then there were additional protections for software developers. Pretty much the justification for this one was like they are not money transmitters, they're just people operating on software. So it is still a actually a kind of nice, in my opinion, clear distinction from like the banking and finance industry, which is like you are tech. You do deal with digital currency, but you are fundamentally different from the existing banking system itself. As far as what you brought up, I think it was that's honestly kind of the name of the game right now, which is where the head count. What's the head count? Where are all the votes at? As it stands right now, this got out of committee by majority. The other bill got out of the agricultural committee by majority as well. We saw the anti CBDC legislation pass overwhelmingly when that was stapled to the Housing Affordability Act. So that one's kind of murky. But again, if we look back to 2025, when we got the Genius Act through, that one was actually, I'm pretty sure it was a filibuster proof majority. It was over 67 votes. That's a lot of extrapolation to bring it to today. And as we know, the political football changes day to day. And we have actually seen the reports that you mentioned previously, which is that there's a good amount of Democrat pushback when it comes to this legislation. A lot of it is primarily just around the president and just not liking him and not wanting him to be able to profit off this stuff. And by my eye, the way that it's set up and it's written, it actually would achieve that. In my opinion, it's a very fair, like just basic ethics kind of clause of like, look, nobody's going to be profiting on this stuff while you're in office. Once you're out, you're fine. And if you have any existing crypto holdings or relations right now, you can put it into a blind trust or you can sell it off. As long as you go hands off, it's totally fine. You can keep your positions as long as you put it in that blind trust kind of system. So I think like the objections have been heard and they appear to have been remedied. Whether or not they want to stick to their arguments and be like, "Oh, it's okay now," that's as we all know, that's not really how politics, especially inside the United States, works. So, yeah, the way I see it, they're definitely going to be looking for a few more votes. I happen to think that based on previous crypto legislation, it's not that hard to maybe swing those votes,
I think they
and
got them, or they're going to get them.
that's true. And I do happen to think that this, unfortunately, is not the hot topic of the day. I think there are a lot bigger news stories and political pieces of legislation that are going on right now that people care more about, especially constituents. And if the constituents care about it, well, then your Congress people are probably going to care about it. So this kind of is like maybe like second or third tier priority. And I think we still have one of the big hurdles, which is that the president appears to be sticking to his guns about the statement that he's not signing any legislation until the SAVE Act gets through, which is the basically voting reform act going on. There has been a renewed push for it, but at the same time, I'm not seeing that thing come to a Senate vote anytime soon. So we have a lot of mixed data at this point, but historically, the crypto stuff has been doing very well over the last few years. Currently, nothing's doing well getting past the president's desk or even just basic Congress at this point. So I look when we look at those the betting markets, I understand why there's a split. I understand why it's volatile. I understand why we sit here and we're like, If they can just get through this, it feels like a pretty done deal. And it feels like there is the momentum there because they're constantly churning on this and they're working on it. It's definitely drawn out, but they never let it die. That's the big distinction there. So, look, I look at Polymarket and I'm like 36% that it's going to get signed by the end of the year. I would say it's higher than that. I'm not saying it's 100%, but I personally feel like it's a higher probability. Good sir,
More
are you
like
there?
looking at the dates. I'm just
Great
curious what the
feedback.
poly market or the prediction markets have as far as what date or when it will go to vote.
Honestly,
That's what I was curious
I
about.
would not be surprised if this is kind of one of those things where they just announce like 3 days out, like, "Oh, yeah, we're going to a vote on this thing." But at the same time, kind of one of the golden rules of politics is you don't call something to the floor for a vote unless you have the votes, because otherwise you just
Yeah,
embarrass yourself.
exactly.
Yeah.
Got everything else here, man. Just curious when they were gonna get somebody had because I like to see what the prediction markets think, like what date it may actually be. See what insiders are saying.
I'd be curious to see if they actually have betting markets for the exact date that it gets passed.
Yeah, I looked for it. I couldn't find it on Poly Market. Well,
They
why
do
not?
that
I
on
mean, you got
some
2
things,
weeks.
but
You got
not
two
all of them.
weeks, man. It's a 1 in 14 chance if they're gonna go to vote or not go to vote. I guess so. It'd be me 15.
Yeah, I think we covered it previously, but we actually took a look at the schedule for Congress. There is a pretty extensive break pretty much for the entire month of October. There's another substantial break for August as well. So realistically, the windows that we're looking at is pretty much like now through early August and then like early August or late August, early September, and then after that, it's pretty much nothing until the next session of Congress, which is going to be January of 2027.
Yeah, and then I
Gosh.
don't know if that's going to happen at that point. So that's what I'm saying. So they need a push to get this done if they're going to get it done. It's teed up this close. You're going to have a lot of distractions if you don't get it done by now. So hopefully sooner than
Yeah.
later.
The bottom line for me on this one is we got the changes. It's still being worked on. It's still getting attention, still being talked about. As far as the changes go, it appears to be a lot of very sensible changes and nothing drastically that alters the bill beyond recognition from what we saw previously. A lot of the same bargaining stuff is in there about the stable coins. We have an expansion on ethics and we have an expansion on some basic stuff like law enforcement and then protections for crypto developers. All that stuff, it feels pretty small beans for me. And a lot of the basis, which is splitting the, in fact, this is actually a fun one for me. They actually gave more authority to the CFTC in this version of the bill compared to the previous one, as opposed to the SEC pretty much having jurisdiction. Because keep in mind, the basis for this bill is who is responsible for what, CFTC or SEC? What are basic definitions, basic functions, and basic guide rails for the crypto industry? That is the meat and potatoes. All the stuff that we've been talking about here tonight, and honestly, for the last like 7 months, it's small, minuscule arguments that big players care a lot about, aka banks versus central exchanges. But at the end of the day, this is still a crypto regulation bill, just getting basic guidelines in there, and we have not strayed from that.
Correct. What else we got on the docket, man?
Oh, I'm glad you asked, good sir. We have the headline of the show. S&P Dow Jones new crypto index snubs Bitcoin, claims it's not a revenue generating protocol. This is coming to us from Be In Crypto. Let's see what they have to say. S&P Dow Jones Indices and Pantera Capital have launched their S&P Pantera Digital Asset Index, a new crypto benchmark that excludes Bitcoin entirely. CEO Kathy Clay said that Bitcoin fails the index's core test, generating real protocol revenue instead of trading purely on speculation. How the index weighs its tokens. It holds
AKA, oh, AKA, that you're talking. They're expecting on fees, staking. Basically,
exactly.
they're looking at more of generating protocols over a store of value. So, but interesting enough, XRP was not included in this. Thought that was interesting too.
That is very true as well. But yeah, if we look at the article here, some of the oh gosh, get out of here. Some of the big names that we've seen: Ethereum, Binance, Solana, Tron, Hyperliquid, bunch of decentralized derivative exchange. These are all some pretty large cap tokens that are included in this what is effectively just a new ETF, but it's an index, so it's technically different. And one of the interesting things here is they're trying to have it more balanced, which is that no single token can exceed 35% of the total, and no other holding can top 20%. These caps mirror rules the S&P applies to its own equity benchmarks. They wanted to bring a stock index discipline into digital assets, and they favor protocols with verifiable economic activity over ones that trade on name recognition alone. So, yeah, that is exactly what you mentioned previously, which is that nobody controls Bitcoin. So, nobody is really generating the fees except for the miners, which could be anybody depending on the technology that you've invested to getting miners operational and paying for the electricity to run them. So, the index the way they talk about it here, it almost seems like they're trying to pitch it more as like a dividend index or an index that has the ability to pay dividends. And it's kind of it seems odd and contradictory to me because the whole point of an index is to track a swath of things that theoretically will average out and be more stable over time. What they've done is they've gone with everything that is not the biggest, most stable thing in the crypto market, which already is not a stable market. Its volatility is part of the game. That's why we're here. And instead, they've chosen to go with everything else on pretty much the next 18 things in a row. Sorry, XRP as well. But basically, the next 18 things that are going to be more volatile than Bitcoin. And guess what? They're all probably going to trade in alignment with each other. Granted, one, two, maybe three of them are going to have some breakout moments. Looking at like Tron and stuff, who's on a pretty great run over the last year at this point,
and
and
hyperliquid.
Hyperliquid as well. But the point that I'm making is that theoretically, the point of an index is to give you more stable returns, less pumps, less dumps.
Well, I mean, I'd say
I don't know if this is going to perform how they think it's going to perform.
So like I look at ETFs, exchange traded funds, right? So that basically what they do is it's more of a we're trying to give you a basket of cryptos of products and protocols that we think have good opportunities here for their clients. So they're going to pick the biggest ones that are out here and go after them for market caps. That's probably the first thing you have to pass is the market cap test, right? And then the next thing is, do you get yield? Do you get any staking reward? Anything like that's tied to it, then we're interested in it. And that's pretty much what it's coming down to, is how they're picking them. But really, this is just an easy way for mainstream people who don't know anything about crypto. They can just buy this ETF and know that they're getting a nice little basket of cryptos without having to actually work hard at it. It's just it's a lazy man's way of doing it. I can tell you this right now. I know that the spot ETFs, ETH, that they've done, and they started this year, they started paying out. So what they do is they take the ETH that they have on their books, they stake it, and then they're gaining the rewards every month, and then they're paying that not all of it, but most of it in a dividend to the holders. So it's translated into a dividend is what it's done. But what's nice about that is, obviously, if you're going to hold something a long time, you don't have to worry about the staking protocol. You don't have to worry about locking up your ETH or that coin like what you have to do in DeFi. We have to lock it up. You can't trade it. Well, with this model, you can essentially keep gaining those dividends, and then you can sell and dump anytime you want. You don't have to worry about being hostage to anything like that. And it's just easy. It's just a lot easier. But like you said, you can rehypothecate all of those dividends every single month they pay them out and re-put them back in. Or if you're smart, you can move them into, a cash account or stable coins in that case. If you are on DeFi, you move into stable coin, you build up a dry powder bag. And then when those things do pull back, you DCAN in when the time is right. That's a smart way to do it. But yeah, a lot of times they'll just rehypothecate it every month back in. So there's a way to get paid to hold. And that's essentially what you're doing when you're doing staking, but you're not having to give up all your capital and stake it in. It's a lot less risky because they're handling all that for you, and you can get out anytime you want. You're not locked up for a certain time frame, I guess is what I'm getting at.
It's true. I look at this one, and I think that they might even be going for something different. I don't know if it's even intentional, but I think it has a very specific effect, or it's going to be noticeable at least. This article doesn't do a great job of actually explaining it, but the little like sub headline they have here actually hits it square on the head, which is that Wall Street warms up to altcoin season. Okay, they don't really talk about altcoin season other than being like, oh wow, it's a great magical time. What you have effectively created with this index is that you are tracking the theoretically top 18 altcoins. That is not Bitcoin. Granted, around these parts, we like to think that Ethereum is a blue
And
chip stock
non-stables and non-stables, so those
and
are
non
excluded
stables.
as well. Yep.
True. But realistically, if there ever is an altcoin season, this index is going to outperform any of the Bitcoin ETFs. And honestly, probably whatever the average ETF that is not a Bitcoin ETF, because right now we have Ethereum, XRP, Solana. I think we have a few other ones as well. This covers the next couple coins beyond the existing ETFs as it is. So if one of those tokens that has an ETF does pop off, it could outperform the index. But on aggregate, I'm going to go out on a limb here and say that this index has the capability to outperform pretty much any of the existing ETFs as it stands right now.
Well,
So
it does. It does because it's exposing yourself to, like, think about it. What are the ETFs you have right now? The only ones you have are Bitcoin, Ethereum, Solana, Doge, and I
I'm
believe
pretty sure there's an
XRP.
XRP. Yeah.
And that's it. Those are the only ones you got. This is now going to get you exposed to this. Now, keep this in mind. There are ETFs that Grayscale had many years ago that you could get exposure to that also gave you exposure to the top. They gave you a basket of stocks, cryptos as well. So that they did have these products back then. This is getting more traction, I think, because you're getting more big players in here. So that's keep in mind.
This is true. But I think the larger point that I'm getting at with this one is that Pantera Capital is a well-known, well-established, large firm on Wall Street. They have been in the game. They know what they're doing. We saw TradFi getting heavily into Bitcoin last cycle, a little bit into Ethereum, Solana, and XRP with the other ETFs. And I'm sure they have their own institutional holdings than actual like acting on chain and stuff. But this sort of index, I think, it's diving down another layer. It's going one layer deeper down the rabbit hole. I know right now we're really covering Tom Lee and SharpLink Gaming and Bitmine, trying to be the next Michael Saylor on Ethereum. But I think that stuff like this is probably going to become more, it's going to happen more often. And people are going to get further into this because once you have the Bitcoin ETFs, once you have ETFs for the next top 3 coins, there's only one direction to keep going. And it's down that top 100 coin list until you get the people what they want. This is a pretty good aggregation. People, I think, have an understand. I don't know if they fully understand altcoin season, but I think they understand that crypto has the capability to pump harder than Bitcoin. And this is possibly that mainstream way to get some of that action.
Well, I think they're just going after what you said. Like what they clearly stated, they're looking for things that tokens must show real revenue generating, meet minimum market cap, which we talked about, and liquidity requirements, right? Which goes into market cap as well. But they also have to have staking and yielding tied to them. So what they're essentially doing is they're going after exactly what the Clarity Act is going to be passed. And so people are trying to position themselves, I think, once again, into more of that. Those protocols were going to be exposure to reward assets, but getting you more of a basket of large cap. But here's the interesting thing. That article didn't talk about this. So another notable one that's going to be in this list is Aave, which I thought, really, Aave? So keep in mind, that's number 50 on the list of market cap. So the reason why I'm bringing that up is they could go further down the list of altcoins here because they're saying it's going to be a basket of 18. But that's all we know right now is Ethereum, Binance, Solana, Tron, Hyperliquid, and Aave. So that's just a handful. You still got 11 more tokens to pop up on that list. The reason I'm bringing the Aave up is because that means you could get some interesting stuff in here that is very attractive in that mid-cap level of crypto. I mean,
oh, for sure.
You could see Sui in there.
I'd like to see that one personally, actually.
You could get in here, well, DAI's not, because that's going to be that one. Chainlink could probably be thrown in there. Cardano probably be most likely thrown in there if that was the case. Monero, maybe. I don't know if Monero's going to be there, but maybe. But it could go down this list. Avalanche could get included in this. That'd be interesting.
Avalanche is in there, yeah.
That'd be a great one to have added to it. Of course, I'm not curious about WorldCoin. But yeah, you could really get some exposure down here to some of these that are really interesting. I mean, yeah, there's some really good ones down here that further down the list that you go. But I don't know. I'd be interested to see where it goes, but we'll see. I mean, it's just one of those things. I thought it was interesting because the fact that you're starting to see how Wall Street is looking at things, and I think they're looking at trying to go down. I think bottom line, they must have people asking about it because else they wouldn't be creating these products if they weren't getting demand, or they're seeing trends more or less. So that was interesting to see. So we'll see on
That's
how
true.
it goes.
I think I'm extrapolating a lot outside of what's being said in the article. And I think the difference between me and the article is that the article is going for its statement purpose, and I'm trying to evaluate what the function in reality is. Obviously, like you mentioned, the statement in the article is they're looking for networks and protocols that actually have revenue generating abilities inside of them. That is very clearly why Bitcoin was left out of this. I hear me out. I completely understand why they're doing it. It makes complete sense. It's like if people wanted exposure to Bitcoin, they have plenty of ways to get it. If you wanted a more less risky way of getting exposure to the rest of kind of the large cap tokens, this is a good way of doing it. I think that identifying them as revenue generating and non-revenue generating, it is a good distinction, and I think you can make the argument of being able to like offer dividends to people invested in the index to kind of get some familiarity with the old heads out there and the people that really like the TradFi stuff. But I think the function at the end of the day is that this realistically is going to be an altcoin season indicator, or at least a way to get exposed to an altcoin season.
Correct.
So
I think me out of the gate, they're probably going to, the max is 35. They're probably going to have 35% or 30%. ETH will probably be the largest holding. That's what I'm going to say right out of the gate.
oh,
ETH
for
will
sure,
probably
yeah.
be the highest, and then they'll
ETH at
probably go
35.
down. ETH will probably be up there. BNB will be probably BNB. Sorry, Solanatron. They'll be probably split up towards the top of the most of the other, carving out probably 60% of the entire index. I mean, I could see Doge getting put in there too. Why not?
Well, I don't know if Doge is technically revenue generating,
Well, I
but
mean, that's just it. Are there staking protocols out there? I don't know. I don't know if I Doge, but yeah, it's just a meme coin, certainly. We'll see.
God, I want to say Doge is actually on the Litecoin blockchain. It's a bit of an artifact, and it is pure market psychology, in my personal opinion. But hear me out. It's honestly, gosh, last time I checked, I want to say it was like number 9 or something in the total market cap. Coin market cap. Let's see. Number
Yeah,
10. Excuse me.
yeah.
Hyperliquid has overtaken it. There you go. Yeah. I don't know. Do you think there's going to be a broader trend that we see going on for this next cycle coming up, or is this just a one-off thing?
Oh, I like I said, I think if the Clarity Act gets passed, you're going to see all types of craziness start popping off. Like I think this is going to happen regardless. This is just a natural flow. Like people, when people don't understand an industry, like for example, I don't know a lot about the coal industry. Well, I can buy an ETF that gets me exposure to a diversified portfolio of just coal if I want, or if I want to have exposure to the Nikkei in Japan, I can get exposure with this index. It gives me the most exposure to that. So it's an easy cheat code that you can do. Now, the only thing it might get rejected is what the fees are going to be on it. The fees are expensive, then you may not get as much adoption. High fees, typically 1.5 to 1 3/4. That's on the high. It's on the high end. Some of these can it can go all the way up to 2s, the 2% range, which doesn't sound like a lot, but it is when you're dealing with lots of money and that compounds. So the fees are going to probably be the biggest thing if it grabs attention. Now, if we start, I can tell you this: if things start pumping, you're going to see people piling into these things because they're going to be looking for more riskier exposure. That's just how people are. And that's what they're going to be looking at, because most people don't know a whole lot about crypto. They're like, okay, I know Bitcoin. They may know Ethereum. They probably know, hell, most people know Bitcoin and Doge. That's pretty much the two that everybody knows. Outside of that, I don't expect anybody else to know much more outside. Maybe USDC is a stable coin, or maybe Tether, maybe, but that's about it. Now, depending on different parts of the world, you go down to South America, they probably know more about crypto because it's more adopted in Central and South America. But in the United States, people don't really know anything about it. So I think because of that, these products will be very attractive from a marketing standpoint. Like, hey, here's a basket, you get diversified. It's more riskier. We don't, in your portfolio, maybe you put 5% or maybe 3% in this is ETF and get you all the exposure you want. I wouldn't, as a risk management, they probably say no more than 3%, 5% max your portfolio. So this would be an easy tool to do so. So that makes it easy. It's simplified. Now, with that said, TradFi comes in here with more of these products. You have more maturing markets. We don't get as much rips in some of these altcoins potentially because they start getting added to these baskets, so they'll be a little bit more muted on the moves. So that's one thing I'd be concerned about. But yeah, you'll see that just trend picking up, certainly, no question about it. Like
By
I
the
said,
way, I do
go
have
ahead.
a small little excerpt from here for you.
Hmm.
As this is from the Pantera website for the official announcement of this
Look at
chain.
that.
Fundamentals that will drive the next decade of demand. Demand for digital asset exposure is poised to grow over the next coming decade. Bank of America and Fidelity now recommend 1 to 4% allocation in digital assets in client portfolios. Yet, JP Morgan Private Bank finds 89% of family offices still hold no digital assets at all. While EY Parthenon research shows 60% of institutions prefer to gain exposure through registered vehicles versus via exchange or direct on chain exposure. The gap is not one of conviction, but a product gap. Every existing multi asset vehicle over indices on Bitcoin weights purely by market cap and puts meme coins incongruously next to protocols with real revenue. So, little things
Correct.
here.
It's easy. It's yeah. I mean, it's interesting that they showed that. But yeah, the biggest thing is like if I'm in crypto, if I, all right, I have a mutual fund or I have a stock trading platform. I don't want to have, if I don't know anything about crypto, now I got to do what now? A central exchange? What is that? Where do I go there? Okay, now wait, what? KYC? What
Seed
is all this
phrase.
crap about now? I got to do.
Ugh.
What is this? And then you start going in further down, and like don't even get them started on DeFi. They're not even going to be looking at that. That's way down on the deep end. They're not even going to care
Really?
about that. Like, oh hell no, I'm not doing that. But and then you're going to tell them to go to central exchange? No. The younger generations may jump on Robinhood. That's why it's so low hanging right now. They can get on. I know you covered it last week, but that's low hanging because it's very simple to set up. It's an app. You can kind of start trading right away. It's just quick. It's user friendly. That's the key there. It's low barrier to entry. Going to these central exchanges aren't so easy. It's like setting up a whole new bank account process of how they've done it. So they've complicated it. Who knows? Maybe that's by design. Just saying. So,
Could be.
so by these products, it's just an easy thing to get exposure to, which I think is very interesting. Look at that right there. 60% of institutions prefer to gain exposure through registered vehicles. Cute way of saying registered vehicles is TradFi. Okay, if it's TradFi, we trust it. Why? Because it's guys in suits and in big buildings, and it's more professionally looking. You know, it's easy to get your money. You feel it's more reputable. Is probably the best way to put it. That's why they're willing to go down that rabbit hole. They haven't Coinbase or Kraken or any of these other central exchanges. They're going to like, okay, I have no idea what this is. And so I could totally see that being the case. So yeah, you probably will have more exposure in that case. But 1 to 4, I would say 1 to 3. Now they're pushing 1 to 4 is interesting. So, and put that in mind. I know we ran these numbers back in the day. If everybody put in, I think it was like just 3% of their portfolio in digital assets, it would, I forgot how many trillions of dollars that would flood into the crypto market, but it was pretty substantial. So it's pretty interesting to see. So will more vehicles like this come out? Yes. But right now, crypto is a laughing stock. Nobody cares about crypto right now. They will be the top. Okay, everybody, they will be the top. So when things start moving up, these vehicles will be sucking in the most people's capital, bringing them in. And when you see these things start ripping and inflows really start ripping on the ETFs, that's going to be like pretty much that's going to be one of your top indicators. Call it here, call it now. That will be one of your top indicators.
I think there's a pretty good chance of that being the case. One of the things that I'm going to be watching in the future, especially when we start to do the transition out of the bear market to the bull market, is I want to be looking at the ETF flows and not just the Bitcoin, but all the different ones. And this index is now getting included in that. The reason I say that is because I'm curious to see if we're going to see more flows into Bitcoin like last cycle, or if we're going to see people actually start to spread out more and actually start to kind of diversify the things that they're getting into. If this stuff is coming out, it's like you said, they put out things that there is a demand for. It appears that there is a demand for this. And if that's the case, then it could indicate that this cycle could have different demand than last cycle, which is that last cycle was all Bitcoin all day long. This cycle, we could actually see expansions and people actually start putting their money in other different products. Yeah.
Correct.
Yeah. All right. Well, we did have a few other articles, but apologies. If you want those, you're going to have to go ahead and join the private Telegram, because that is where we put the latest and greatest for all of our members inside of there. Which, by the way, shout out to everybody that showed up for the Tuesday stream with Tracker. Heard it was a good little turnout. Heard there was a great discussion as well. We're going to be doing even more of those. Tracker, is that a regular scheduled thing that you're going to be doing inside the Telegram now? Or
yeah, it's on the Telegram. We're trying to shoot for Tuesdays and Thursdays around 6 p.m. Eastern. Something we just started jumping in there, started asking questions, start having roundtable discussions, because right now with the way the markets are shaping up, right now you better start getting your plans in place. You better start figuring out what you're going to do, where you're going to be allocating your funds, what levels you're looking to get in at, where's your exit strategy is going to be at various price points. You better start laying that stuff out now. You do not want to be fumbling their bag when things start moving quickly, because that's when the mistakes start to happen. We also, so we talked about that. We went into much more in depth on strategies and also various indicators and narratives that we think are going to start playing out. But we also start talking about some of the other options you can really get exposure to, and kind of that portfolio. Talking about, obviously, Bitcoin. I was more a proponent pushing Ethereum, because I think it's got more legs to room. It's looking stronger on the ETH/BTC ratio currently right now. I would look at more value to ETH than whatever Bitcoin. And then we went down a list of other cryptos that we probably would dive into. Talked about some of the Pulse chain ecosystems that were out there and strategies there as well. Talking about other real world asset exposures and more bigger opportunities that you can gain outside of the Ethereum network when it comes to RWAs, because there's a lot, like we talked about the last couple of weeks. The war for who can grab the most amount of assets and market cap and the real world assets is on, and these partners deals are going on like crazy right now. We've been watching it a lot. There's deals going on all over. We're talking big deals. We're talking tokenizations of major markets around the world. They're tokenizing and bringing them on. Why would they do that? Well, if you tokenize stocks, you can trade them 24/7. You're not limited to just the activities within the open markets. Now you can trade them 24/7, 365 days a year. That's another big advantage. And that's just stocks. You have tokenizations in so many different categories that you can go down the rabbit hole on. I know we've talked about here on the show before, but okay, that's great. But where do you go to find out what your data? How do you look for it? How do you find out which exposure? Who's got the most exposure? Who's got the most potential upside? Who's got the best partners? These are all the things you have to start connecting the dots to see who's got the more potential for the upside. So when this Clarity Act gets passed, who's going to benefit the most? The easy winner is going to be Ethereum, probably Solana, maybe BNB and XRP. They'll be definitely winners. Ethereum will definitely be a big winner, no question about it, because it's got the lion's share. But within those networks, within those ecosystems, what platforms look good? What opportunities are out there? All that kind of stuff's going to start coming out. So a lot of talks, but that's what we're kind of diving into. We had some really good discussions around that, and we'll keep it going, because the best way to bounce ideas off of people, that's the kind of discussions we like to have. And then we also started talking about security. How should you be laying out your security? If you're in DeFi, what kind of protocols, what kind of wallet should you be looking at utilizing? Which ones, what are some of the new technologies in the DeFi security protocols that you should be probably looking at? Because that's something I think people are getting lax on, is security, because we've been rocked to sleep because of these prices. But these are the things you guys start talking about now. You can't be messing with this stuff when the market starts moving. You don't got time to be talking about that kind of stuff. You really have to be dialed in and have your game plan laid out. It's like it's almost like playing let's say you're going to go on a team, you're going to play a sport, you're ready to go in there, but you haven't practiced, you haven't done anything, you don't even know what your game plan is. How do you think it's going to go? You're just going to wing it? Good luck.
Yeah. Inside the Telegram, you find all that great stuff. By the way, the entire focus is everything between basic and advanced, covering security, just basic tokens, fundamentals, strategies, and really diving into stuff and helping you guys learn how to do your own research and how to actually vet sources and look at projects and all that kind of stuff. All that is inside the private Telegram. You can access it by heading over to walktheblockndf.com. Over on the membership page, you will find the link to join up there. And inside of there, you're going to find the entire video archive of all those private streams that we've done in the past, and all the exclusive videos that we put in there as well that are not available on YouTube. But outside of that, we will continue to be streaming here on YouTube, 9 p.m. Eastern time every Thursday.
How much is it, Zenith? How much is this thing?
Oh, how much is this thing?
Scroll down.
$40 a month.
$40,
there you go.
Man. $40. Good luck finding anything where you're going to be able to talk to people who've been in this industry for as much as we've been in here and bouncing ideas, and made a lot of mistakes along the way, so you don't have to relive those same mistakes for $40 a month. It's one of these things. I can tell you right now, a lot of people out there charging crazy amount of monies for courses and programs and stuff out there that is astronomical. $40 is really just a, give us a little something for all of our time and effort we're putting into it. That's pretty much all it is. Like I said, it's one of those things. If you wanted to join in there. If you can cut out anytime you want. If you don't like it, it's fine.
Yeah.
All right. And if you don't want to join, it's fine. You can still meet us here every Thursday night. We're still going to be here. So there's no problems there as well. So it's all good.
Yes,
All right.
sir. As we like to say around here, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. We all work together. We can all win together. Alrighty, sir. That is about it for this fine evening. Any final thoughts? You want to give a probability prediction on the Clarity Act getting passed in 2026 or what?
I think it's going to get passed. When? I don't know. Like, I'm hoping it's going to get passed before August. I think if they don't get it out by August 7th, they're going to have a very, very difficult time, because with the holidays and there's more pressing matters going on. I say it's got traction right now. If these things stall out and you don't get the traction, it's really tough to get it happen. So for this year, I think the next 2 weeks, you're going to find out if it's going to happen or not. I find it hard to believe. I know there's back-end deals going on. There always
are. Always.
So for the Democrats that are willing to cross that line, how do I put it? This is going to get passed no matter what. It's just a matter of time. We're going this direction. So I think if there's people that are on the sideline, if I was in that position of power and my vote mattered that much, I'd be like, how much does my vote matter? All right, I got all these things that I promised my voters that I would try to do for them, this and this and this. Here's the things that I care about. Are you going to support me on these things? Am I going to be able to get traction on these things? This is your chance to basically put down your wish list. So lay out your wish list, what you ran on your platform or whatever you're trying to do for your people. Try to get whatever it is. I'm hoping use that leverage to get whatever the people who voted you into power to put you there, that you do the right thing and try to get them the most they can to try to help them out with whatever area you represent. That was how I would basically look at it. And then you get this thing signed. And then, then the next thing I still think is going to rear its head. I think the SEC is going to come back. I know I hinted about it, but now the SEC is starting to hint out there about some other things. I think you're going to see things like these prediction markets are going to be under scrutiny coming up pretty soon. They already are starting to get traction. I think the fact that you're tokenizing stocks that are not tied to this, I think there's going to be some regulation around there that's going to have to get ironed out and stuff. Because right now there's this whole thing like they don't have a clear games. The rules to this game have not been laid out. So they better figure it out soon. And that's the other thing. They can't play around with this too much, because there's a ton of other countries out there that'd be more than willing to set it up in a straight regulation going. So, everybody right now is watching the United States. Make this thing happen. Let's get it out of the way. That big impediment now will be out of the way. And now things can really start to move forward with innovation and the ability to do a lot of things that'll be amazing. Like I said, this is kind of like laying out the internet protocol of when the internet was going live, when it just said how this was going to be working. You're laying this out now with e-commerce and all the stuff that came out of that. So we have a chance to really do a lot of really cool things here. That this stuff all this stuff is boring to everybody. But in order to get to a phone that could tell you and map you out exactly where you are and take you where you are, you had to have GPS, you had to have the internet protocol, you had to have Wi-Fi, you needed a mobile device, you need all these things. This is the foundation to lay that out. So you'll see a lot of innovative technologies and companies coming out of this. So I think it'd be really fascinating to see. So it's going to happen. Just I hope they can get it done here the next 2 weeks so we can stop talking about it and we can move forward.
I'm right there with you. I completely disagree with Polymarket's 37% chance. I think it's definitely north of 50% for getting passed in 2026. But like you said, this is one of those things that will have to be done at some point. If not now, definitely in the future, because this is the direction we're going. It's TradFi is pretty much all in on it at this point. So if that's any indication, yeah, this is happening one way or another. I'm just hoping it happens within the next couple months here. But That is pretty much it for tonight here, folks. We will catch you guys again next Thursday, 9 p.m. Eastern time for our stream here on YouTube. And for everybody inside of the Telegram, we'll see you guys very soon. If you have any comments, questions, or good articles that you want to post in there, please do so. We love seeing those, and we're always happy to answer any questions you do have in there. With that being said, that is about it. So with that is all for tonight, ladies and gentlemen. We catch you guys next time. We do appreciate if you do the YouTube pleasantries, the like, commenting, and subscribing, all that good stuff. But until we guys catch you guys next week, I hope you all have a fantastic weekend, and we will see you then. Good night.